Last Tuesday, we talked about potential reversal and reaching 6,000, or at least testing the swing high level is happening and reach that intraday, hit the 6,000 level, rejection showed up immediately. That doesn't look that constructive. We talked about this zone before. This is the previous access zone where the supports become the resistance level, and this is where the supply spike and the start of the downswing. That area here is considered as significant. The first time it hit this 6,000 level, there is a reaction, but that comes with slight increase of the volume. But second times, also there is localized increase of volume. Rejection suggests that there is still supplies presence at this level, not yet ready to commit above 6,000. That's why we have a reaction and followed by testing or consolidation. Reaction 1, reaction 2. 2 is better than 1. In terms of the magnitude to the downside, we have a reaction on 1, but 2 is rather a consolidation. If we zoom in, here is a rejection of the 6,000 level. Next day, there is follow through to the downside, but only intraday, and get bought up right at this level. This is considered as a minor level 58.65. If we zoom into the hourly time frame, there is a access line around 58.65. That is a rather minor level at 58.65. That's why after the rejection of the 6,000, tested the 58.65 level, the access line, attempt to go up and consolidate. The first level that we want to see it hold up well is 58.65. Second level is still the previous swing low level, or we could take into account this true range, the gap area, roughly around 5700, somewhere around here. And that's the trading range that we could anticipate the S&P consolidate. But based on the current price action, reaction 1 and then followed by reaction 2, which mainly consolidate rather than a pullback or downswing. Based on this, is likely going to have another attempt to test 6,000 and ready to penetrate and come in above. This is what I anticipate, because even with Thursday price action rejection tail showing up at the 6,000 level, the supply shown up here is a localized increase, unlike what we have previously. This is important. Suggests that there is still slight increase, but the demand is not as aggressive as before, unlike what we have here or even here. Rather, this is indecision between the bull and the bear, but so far the bull has an upper hand because we have a high low structure and the volatility has been decreasing. This is obvious. Comparing these two sections, section 1, section 2, section 3, and this right hand side of the chart has rather low volatility. This is a constructive signal, suggests that the uptrend is still intact, the upswing is still intact, and is on track to hit 6,000 and commit above to test the previous all-time high level before we see a meaningful reaction. That could be after a hit of the previous all-time high level at 61.50. The immediate direction so far is an attempt to go up to test 6,000 level, because it has been basing here suggests that the reaction is mediocre and is negligible. No follow through to the downside, is waiting for the bull to show consistent demand and attempt to push up. Everyone is waiting for the supply to come out at this level. The next time when it tests the 6,000 level, it's important to see whether we'll have even higher supply or a supply keep decreasing before it could come in above and to test a higher target at 61.50. So far, the swing is still up, but that could be a consolidation structure or another attempt to test 6,000. If there's a supply left over, it could retrace and building up another right handle. It's building up a little base, depending on breakout.